Hi and welcome back to today's morning report on Thursday the 11th of June with me, Rich Perry, market analyst at Hand Tech Markets. Moving on to Eurodollar now, and this Eurodollar chart had a pretty mixed day yesterday, I would say. It's a positive day, and it looked to post a positive candle, but certainly it shows that the bulls have run out of impetus on the upside, and the fact that 1384 was the reaction high. It was only 4 pips above that key, or 4 or 5 pips above that key reaction high from last week. So I would say that's still intact, and that was a shooting star. Yesterday's move obviously closed below the midpoint of the day, and subsequently we've seen that the selling pressure start to ramp up again today. This is not necessarily the end of the bull control yet. I think the near-term bulls would lose control if you lost the support at 13, which was the reaction low on Tuesday, and that would suggest that whole phase is just rolled over. But certainly at the moment, the pressure is growing to the downside. Trading below yesterday's low as well is not a great move, not all that strong considering the failed breakout above that reaction high at 1380. I think that this is a pretty mixed chart. It's fairly volatile. There is a slightly bullish bias due to the fact that you're trading sort of broadly above the sort of near-term moving averages, and also momentum indicators are still just slightly rising. But it's not a great and the bulls are fairly tentative in terms. It's a fairly sort of cautious and indecisive chart, I think, at the moment. And the fact is that concerns me is that you've got this significant overhead 14 that comes in around 1450. That obviously the reaction high absolutely was at 1466, but certainly that resistance comes in fairly significant fashion around 1450 from these old lows and highs from January, February, and again then from May. So the fact that you see overhead supply coming in, I think the bulls are very cautious up at these levels, and anything that sort of gives them an opportunity to take profits is sort of happening at the moment. Doesn't necessarily mean that that's the end of this bull phase or this move from in the last couple of weeks. However, it is a very tentative looking chart at the moment, and as I said, that supports at around about 12 figure actually, because 12 figure seems to be a sort of a bit of a historic pivot level on this chart anyway. It has provided numerous sort of pivots around 12 figure in the last so 12 figure is a bit of a level, and then beyond that, after that, you're looking at another sort of near-term pivot level, very near-term pivot level at 5, which is that reaction low, then subsequent reaction high. So that is another near-term pivot level. But certainly, I'd say that if you lost that reaction low at 1213 from Tuesday's low, and then obviously that pivot at 12 figure, then the bulls are certainly losing impetus, looking like they've lost control as well. So it could be that this is a fairly important day. You've got retail sales for the States coming out at 1:30. That could certainly have an impact on this chart. Recent times retail sales has actually been disappointing, so that's been supportive of Eurodollar. However, if it does come out strongly, then you could see that Eurodollar under threat once again to the downside, and that support at 12 figure under pressure. So could be an important time coming up, obviously, as I said, with that big resistance overhead and the fact that this rally could be beginning to roll over. I mean, I could even just draw a very near-term sort of uptrend in there that you could maybe start to think about as well. That uptrend today, 1184. So yeah, again, that would be around that sort of 1175 mark. So all these sort of this bit of a confluence of support levels between sort of 1175 and 1210, 1215 area. Lots to think about on Eurodollar today. Anyway, I wish you good luck, and I'll speak to you later. Thank you.